What's up, guys? Wanted to come talk today about how to effectively use a screener, um, and more so just how to effectively pick the right assets for you. And we've recently been talking a lot about um, looking in specific sectors and industries before um, actually finding the stocks, and that can really help narrow down with picking your the sectors, and even more than that, specifically your industries that you're wanting to allocate some capital to, and then finding specific companies that appeal to you the most. So today we wanted to talk about um, kind of, we know a lot of people have their standard 401ks, retirement funds, things like that, where you might just be trying to get 10%. But we have a lot of people that also say, okay, I have some money I've set aside, and I want to really try to grow this. It's a small amount of capital. This is not at all related to my retirement. This is some side cash I want to try to grow. So that you'd handle a lot differently than money that is going to make or break your financial future. So a couple things, and this is good whether it's for a long-term portfolio or whatever it may be, is understanding how to use a screener and the metrics. So for example, one of the best metrics when trying to build a portfolio that is attempting to beat the market is you want to look at your beta. So that is going to be your volatility relative to the S&P. And in this situation, we're going to go 2 and above here. So this just means that all these stocks are going to be in the past. We have this on 1 year. So in the past year, we're at least double the volatility relative to the overall market. And so as we can see here, Nvidia, Broadcom, all these blue chip companies that are very volatile. And then from there, we can look at the usual metrics that we'd be looking at with some of these companies. Now, one thing to keep in mind is a lot of these home run hitters that you might be buying, at one point they were all, or most of them were unprofitable companies. So even though for good long-term growth, you're usually looking for profitable companies, if a company's not profitable, that, once they turn profitable, the stock price will generally rise a lot, which means if a company's not profitable that you believe in, you can get in at better prices. So that's always something to think of when you're allocating small amounts of capital. But what I want to look at here is performance. So let's say you wanted high volatility and you wanted 10% and below in the past year. So as we can see here, actually a stock that we recommended on our watch list about a week ago, already up 10% in the past 5 days, AMD. This is a stock that was trending for a while with the original AI boom, and then kind of got hit pretty hard this past year. So we like the company. Not to say anyone should go buy it, but at around 120 and 110 to 120, we really did like AMD. We felt like it was a great buy low opportunity, but that's besides the point. Let's get back to the main topics of today. So when attempting to allocate this capital, now we can see we have even less and less stocks to meet these specifications. Venture Global, actually our best performer of the year, up 65% already. So all these stocks meet these metrics. Now, SMCI we're also big on. These are a lot of our big growth stocks. So beta is really useful. And for example, if you wanted to be really low risk, maybe focusing on dividends or something like that, you probably want to go below 1 or around 1. So now from there you can pick your industries, like we've talked about, industries and sectors that you love, and that can really help you. Net income growth, like we said, this all depends on what you're looking for. The people, even with PE ratios, people tend to see a high PE ratio and think, okay, this is the worst company ever. This thing's not going to work out. Well, okay, that maybe not in the past that was the case, but like we've seen with Palantir, the PE is now at like 600, and it's showing no sign of slowing down. Not to say it won't fall, but it's always good to look at PE growth, which is analysts the expected growth, incorporate it into that expected earnings, or earnings with the expected growth. So it allows investors to see what, like, let's take a look at this. AMD is still here with the 1 and below PE growth, even though the P is a 94. So like we said, that factors in projected growth. Always good to look at, because especially in tech, it's very easy to get caught up in PE ratios when it's not irrelevant, but less relevant than maybe the financial sector. So don't want to bore anyone with details today, but like always, thank you to everyone that subscribes to us. And any questions on finding the best stocks or just finding things that work for you, feel free to always ask us. There's about infinite possibilities with screeners. We we always like having 3 to 5 metrics, maybe 10, depending on what you're looking for. Not overloading it with information, but the more uh, the more harsh you go with the metrics, the more metrics you provide, the more specific it gets, the tighter list of stocks you get. So always good to look at, always good to understand these metrics so you can know what you're looking for, and then combining that with the metrics you're looking for, the evaluation that you want. You can combine that with the sectors and industries, and that really helps narrow down in actually finding stocks that fit your goals. Thanks, guys.